Real estate consulting firm Urbanation has released a new report on how the condo market is performing in the Greater Toronto Area. Despite a slowdown in sales, there is some positive news for those who have invested in a condo. Well, joining me now is Shaun Hildebrand, president of Urbanation. Shaun, I wonder if we can first just start out by, sort of painting a picture, if you could, of what activity has been like in condo development in the Greater Toronto Area over the past couple of years.
Well, thanks for having me. So in the initial months following the onset of the pandemic, pre-construction sales activity slowed down quite remarkably. Developers were holding back on new launches. But as we came into 2021, we saw a record number of new condo sales in the GTA. And that momentum carried forward into the first quarter of this year. And then with the latest numbers, we did see a bit of a pullback in sales activity. There was just under 6,800 new condo sales in the second quarter. That was down about 24% year over year, but inventory levels still remain low. In fact, current unsold inventory in the GTA new condo market right now is 20% below the 10-year average. So with demand staying pretty high and inventories staying pretty low, we still had continued upward pressure on new condo prices. In fact, the average price per square foot for a new unsold condo was up 20% year over year, reaching a record high in the second quarter.
Can you break down those categories for us? So unsold inventory, would those be new condos that are, waiting for occupants, or are these pre-sales that are, still under construction?
Yeah, the vast majority of that unsold supply would still be in pre-construction. So in Toronto, developers are required to sell at least 80% of their units before they're able to qualify for construction financing and proceed on the development. So the unsold inventory that we're seeing in the market has really not even broken ground yet.
Okay. Now, in terms of what you were expecting to come to market this year in, that pre-sale category, how has that, come in under the mark of where you were expecting it?
Yeah, with sales reaching new highs last year, and again, as I mentioned, that momentum carried forward into the first part of this year, developers had huge plans to launch new projects in the GTA. And we were looking at around 35,000 new condos that were expected to come to market as pre-sales in 2022. In the first half of this year, we had about 16,000 units launched. There's been a couple of thousand in July, but it looks like we'll probably fall short by at least 10,000 units from that target. And, to some that might not seem problematic because, you look around Toronto and there's a construction crane on every corner. It seemingly, would appear that we're building enough condos as is. And to be fair, there is close to 120,000 new condos in development across the GTA right now, which is a record high. But as we've been seeing quite clearly through the rental market, because that's where a lot of this new supply ultimately ends up, we're really not building enough. And this is, the right time to start ramping up supply because, in the condo market, there's typically a lag of at least 5 years between pre-sales and completion. So realizing that demand is going to recover from this current slump and, demographic-driven demand coming from record high levels of immigration in the future is going to require more supply. The problem is that new construction condos in Toronto are primarily financed through private investors, right? Individual investors that are buying these units as rental investments for the most part. And so they're very, very much subject to cyclical changes, whereas, the population just keeps growing and that need for housing keeps growing.
So you think that potentially these developers are delaying or canceling because they expect that the people who would be buying are feeling a little less or feeling a bit of a chill from higher rates, perhaps?
Yeah, I think that's a big part of it. Even though when you buy a pre-sale unit, you don't need a mortgage right now. You're not going to close on the unit for several years down the road. But the expectation of higher interest rates and their impact on price appreciation certainly does factor into buyer psychology. And as well, because of how high prices have risen versus rents, like the current cap rate on a condo is about 3.5%. The current government of Canada bond yield is close to that level. So, there's not, the most attractive economics, I'd say, of investing into condos right now. And in fact, when you look towards the second half of this year and in the years to come, it's probably going to be the case that the majority of condo investors are going to see negative cash flow. So, encouraging them to continue buying is a difficult proposition prior to interest rate increases, and it's even more challenging now. And on the cost side, developers are having to deal with really high construction costs, development charges that are escalating very quickly in the city, lengthy approval processes and timelines. Labor shortages, and there just doesn't seem to be much room for them to adjust pricing in this current environment to help to drive sales activity higher.
What sort of impact are you seeing on prices of the pre-sale condos? Are they easing at all?
No, they've stayed pretty much where they have been at record highs, and they're up 20% year over year.
Because of tight inventory?
Yeah, tight inventory. And you know what? The projects that are launching, they're still doing okay. They're not rapidly selling out as they did earlier in the year, but more than half of the units that were brought to the market as pre-sales in the first quarter were sold by the end of the period. So, there is still sales that are happening. So there really isn't much of a need for new condo prices to adjust quite yet. And as well, looking at the resale market, condo prices in the resale market haven't changed a whole lot either. So they're down about 4.5% quarter over quarter, whereas in the low-rise market, we've seen much steeper declines. So the biggest change I think I've seen in terms of pricing is just a little bit more flexibility as it relates to deposits. So, lowering deposit thresholds from, what was normally maybe 15% in the first year to stretch that out over a longer period of time, or perhaps lower it to 10%. And some projects that are perhaps further along, lowering that to 5%.